Welcome to Trading Nation, folks. I'm Chemi. Apple officially entering correction territory after hitting highs just 2 weeks ago. So the big question is, should you buy the dip or is there more pain ahead? Today we've got David Seaburg from Cowen and Larry McDonald with the Bear Traps Report. Larry, let's start with you. Buy, sell, or hold Apple?
I'd wait here. I think that the capitulation process is about 70% complete, and you're going to get a beautiful opportunity and probably in the next 10 days, but there's some more pain ahead. Here's the most important factor, right? There's probably close to 1,000 dips that have been bought since Lehman, right? So the bulls have been conditioned to buy these dips. So early on in a bull market correction where we are now, when we're not even in a correction, but Apple's in a correction, those early dips are the best to buy because the bull still has tons of confidence. People haven't really been burnt yet. So you're going to get a spectacular opportunity to step in here and buy some of these fallen angels, but you need a little bit more pain.
David, let's turn to you. That stock chart, 180 to 160, just like that. 3 months of gains long gone. Do you step in here at this dip? But it looks like a falling knife to me.
Yeah, you know, I got to tell you, I like it here. And I look at it and say a couple reasons. It de-risked mainly into the print. There was a tremendous amount of de-risking into the print. People got very cautious and concerned about the quarter. And then you have one of the biggest, voices on the street today come out and downgrade the stock, along with a few other downgrades, and the stock's down less than 3%. I look at it and say a lot of the, weaker hands, if you will, are out of this. I'm constructive on obviously the amount of cash they have and what they can do with that cash. And there's also the services side of the business. I think that the street is really modeling out when you look at, the gross margins for the services side. If they continue to grow it, let's say at 20% a clip a year, could even grow further, more than that. Will gross margins ramp? And if they do, the street is not modeling that for that. So it could, be an inflection for, obviously a revision higher in earnings at that point. But I do say at these levels, I think it's kind of a no-brainer given the fact that you've got this sort of cash on hand that they can do something with if they flex their muscle and start to return, cash to shareholders or make some sort of meaningful acquisition that could be transformative. The stock will be off to the races.
All right. I like the confidence there. You're saying it's a no-brainer. David Seaburg from Cowen, Larry McDonald from the Bear Traps Report. Thanks to both of you for joining me here on Trading Nation. I'm Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.